I do want to start off this video with what Jim Cramer, the great stock analysis that he is, what Jim Cramer has been saying on Meta throughout the past few years.
Now, you're talking about 1 billion people. You're talking about $100 per person. You're talking about market share take by Zuckerberg because he's simply unstoppable. People should be buying the stock.
People should be buying the stock.
Meta has officially plunged more than $700 billion.
I trusted this management team. That was ill-advised, and I apologize.
So, yeah, that was Jim Cramer. And when he talks about a stock, he's often talking short term, like what's going to happen over the next 2 months, 3 months. And unfortunately, this can end up in a sort of sad way where you get things completely wrong. So in June 2022, he was saying, buy the stock, the metaverse is coming, and all of this. He had Zuckerberg on his show and he was buying into the company hard. And then he actually went back. And then the company shot down in price. I'll just show you quickly. Just went crazy down because Zuckerberg was basically just blowing through a bunch of money. And also in 2021, 2022, the whole stock market went down as well. After that, he retracted on what he said. He's like, okay, sorry, it's a bad stock. I don't really like it. And the funny thing was after that, it went back up in price. So that can be the problem with speaking kind of short term on a stock. You're like, this is what's going to happen over 3 months. This is a great stock to own now. Anyway, that's what happened with Jim Cramer. And I'll just say for me, and I also think for Lee as well, when we're speaking on stocks, Meta, whatever stock, basically all the time, we never really speak on something 3 months, 1 month in advance, what's going to happen over the short term. It's basically always, for me, at least 3 years. What about you, Lee?
Yeah. Because we're not basing it on the price movements at all. We're just basing it on what the company fundamentals look like. So like in that example for Cramer, right? Like nothing actually changed that much in the company fundamentals. The stock price changed and that's why he started going all angry. But like, if you're looking at the fundamentals, you're like, oh, it's the same company I bought like 6 months ago.
You know, speaking about underlying fundamentals and the way Warren Buffett might analyze a stock, let's get into a bit about Meta and the underlying business that Meta has, or Facebook, which got its name changed, I think, in 2021. So Meta, which is a holding company, it holds a bunch of different businesses. And all of these businesses are social media businesses, basically. You got Facebook. Everyone knows what Facebook is. I don't need to explain it. It has over 3 billion users, basically almost half the world on Facebook. Then you got Instagram, over 2 billion users. And then you have WhatsApp, which is quite interesting, the messenger site. That has about 2 billion monthly active users as well. But the question is, just looking at WhatsApp as a business owner, they don't really monetize it. They're not really making any money from it. And I was actually speaking to Sven Carlin about this, and I believe he was speaking something on the lines of, it's actually quite a hard business to monetize, because imagine WhatsApp started advertising on their platform. You could easily just switch to another free messaging site like Line, or there's hundreds of them that you could use. So if Facebook, Meta do monetize WhatsApp, people can just switch over very easily. So can they make much money from WhatsApp? That's the question. A lot of analysts think, no, it's going to be very hard for them to monetize WhatsApp.
I'll just pass in there with like a concept that I mentioned last time. And it might be interesting for people to remember about it. So this is like an example of a business or an app that has low network effects versus a business or an app that has high network effects. Like now, the reason why it's so hard, for example, or it's so easy for Facebook to advertise is because everyone's on Facebook. So like it's very hard for someone just to move to a different social networking site because not all their friends are on there. There's no posts being made on there. It's just boring. Facebook has very high network effects, whereas WhatsApp doesn't have that high network effects. It's much easier just to move to a different messaging app and then just message your friend and be like, oh, can you just download Telegram? I'll message you on that. Can you just download Signal? I'll message you on that. Because it's more like one-to-one interactions as opposed to like one-to-many and having your whole group on there. So this is an example of why networks businesses with high network effects are so much more valuable.
Yeah, so Facebook is a ton more valuable than WhatsApp, even though the users are kind of similar, 2 billion, 3 billion. Okay, then we'll go into the metaverse. So Zuckerberg, about 2 years ago, he comes up with this grand ploy, the metaverse. He plunges a ton of money into the metaverse. The reports say that he spent approximately $36 billion on the metaverse. And I think once you get into the billions, our mind kind of zones out. It's like, okay, that's a lot of money generally. But I don't think people quite comprehend how much $36 billion is to spend on an idea that you have. Facebook, Meta, were known as a cash flow generating machine from 2014 to 2020. 2014, they made 3 billion. Then it went to 4 billion. Then it went to 10 billion, 15 billion. So really, they're spending like at least a couple years of income on this idea that they have of the metaverse, which is, let's just say a lot of people very much doubt they should have spent that much money on it. And I think the general consensus for the metaverse is that it's been one big flop. I'm not really into stuff like that. I don't do like gaming. I actually just don't like the idea of it, having a screen right in front of my eyes. So I'm not an expert on this, but the general consensus is that the metaverse has been quite a flop. I don't know about you, Lee. Do you have any of your friends playing the metaverse? What do you think on it?
I definitely agree that it's been a flop so far. I think I have a little bit of analysis that I'll go into soon. And I think it actually points to the reason why I think they're putting all this money in the metaverse. I don't think it's completely like random that he's investing all this money in the metaverse. Although I also don't necessarily know if it is a good idea. Okay, so this is from Facebook's most recent 10K statement. 10K is like their annual financial report. This is a breakdown of what their revenue is. Family of apps, that's basically all their apps. That's Facebook, Instagram, WhatsApp, all their apps put together. $114 billion in revenue they made from those apps. Reality Labs, that is all their metaverse stuff. That's the Oculus headset and any revenue they're getting from the metaverse. That's $2 billion. So the metaverse revenue is less than 2% of their total revenue. Now, they're spending a huge amount of money on the metaverse. And you might ask, like, okay, why the heck are they spending so much money on this metaverse revenue when most of their money, almost all of their money is coming from this family of apps, from Facebook, Instagram, WhatsApp. This is really important for anyone who's investing in Facebook. So have a look at this. Daily active people worldwide, and this is in all of their family of apps. So this is like daily active people over Facebook, Instagram, WhatsApp. So it's gone from 2.6 billion in 2020 up to 2.93 billion in 2022. That's like a decent-ish growth. But I think the most important thing that any logical person would realize is 2.93 billion. There's about 7 billion people in the world. Mm. So if you look at Facebook's potential for future growth, they can really only just about double. If they double in size, they pretty much got everyone in the world, like daily logging into one of their apps.
Yeah, if they doubled, they would basically have all of the internet users who use the internet. Yeah.
So there's not that much room for growth, right? Like they're really like hitting the maximum of their market size.
Of course.
And the only other thing you could say is maybe their potential for future growth in revenue will be, okay, maybe they can't grow that many more users, but maybe what they can do is they can grow the number of dollars per user. And that's where this other graph comes in, which is also taken from their 10K statement. But you can see, if you look down here, down the bottom, since 2020, I mean, it's been roughly the same. So ARPP is annual revenue per person, I think. So it's like not changing. 8.62, down to 7, back up to 8, 8.889, down to 7, and ends with 8.63, which is about the same as the start. So it's not really changing that much.
Yep.
So I think Facebook really have to worry, like, how are they going to keep growing in the future at the rate they have been growing? And I think that might be what's driving some of this this like crazy investment into the metaverse or other forms of making money.
But still, the question does come in: is this a wise move to spend, 36 billion on an idea? And so you said like the potential revenue for the Facebook and the social media side of things, maybe let's just say they could potentially double almost at most. Like that's law of big numbers. They're so big right now that if they double, they've basically got the whole world. That's all they can almost do. But even if like they invent the metaverse and the metaverse takes off and 2 billion people use the metaverse, what's that going to do to their income as well? I don't know, probably, no, it wouldn't even double it. It would increase it by, who knows, 40%. I'm not sure. Yeah, I mean, it will add a nice amount of cash flow to it.
Yeah, this is where like Warren Buffett would actually come in really helpful if Zuck got him as an advisor, because like the two options you have when you're a business and you're generating lots of cash, but you don't have places to invest it, is you either start issuing dividends back to your shareholders, like take your money out of the company, give it back to the people who own it, or you start repurchasing your shares. The one that Apple did is repurchase their shares, and they've done fantastic over the last 5 years. I think Facebook could, like I think that would, it seems like that would be the best option, right? Like stop spending money on this metaverse and just like repurchase your shares.
But that's also the third option as well, though. You can reinvest it in the business, right?
Exactly.
And the question just comes down to, is it a good investment? So you want to spend as little for investing, you want to spend as little money as possible and get as much money as possible, generally speaking. So is it worthwhile for Zuck to invest 36 billion? Some say no, some say yes. I would have preferred if you went with the Jeff Bezos Amazon type tactic where you invest a whole lot less money instead of just like spending so much on an idea that has no proof of concept.
I agreed, and maybe that is what he's doing now. Because like it seems like he's cutting those expenses, and maybe he is going to stop investing in metaverse. And if he does stop investing that much in the metaverse, he has to put his money somewhere. So it'll be interesting to see what he does, if he starts repurchasing shares or like issuing dividends or something else.
Well, one of the things that I'm sure he's put a bit of money into, but I don't think he's put like that much money into, which is the new social media platform that he's developed, which is Threads, which is kind of like Meta's version of Twitter. I kind of think it's like Meta's version of Twitter, where they're more kinder, where there's less sort of back and forth going on. But also, if you say the wrong things, they're just going to ban you. Or if you're too aggressive or something, they're just going to ban you. So it kind of gives me like the Ellen DeGeneres kind of vibes. Like, oh yeah, this is a kind, happy place. And I'm sure it's going to take a bit of the sort of Twitter market. But I mean, it got 100 million signups in 5 days, which was crazy. I think this must be I'd say, the quickest signups for any social media platform. But in saying that, I don't think it's going to get as big as Twitter.
I heard it was the quickest signups for anything. It beat OpenAI or ChatGPT. Actually on that, I'm gonna quickly share my screen. I brought up Twitter's income statement from like 2021, or when the last income statement it released when it was still public, and you can see their total revenue is $5 billion. $5 billion. Their earnings, their net income out of that was negative. That's because their management wasn't good. They had like way too many employees, blah, 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 blah. I just did some like estimation, and I figured like maximum, I reckon they could have like retained maybe like 2, maybe 3 billion of this 5 billion revenue if they ran the company really well. So Facebook are investing in Threads. If Threads like does really well and it becomes as big as Twitter, how much revenue is that going to add to Facebook? So just remember the number 3 billion, right? 3 billion is max that they could get if they could like become as big as Twitter.
Yeah.
Let's have a look at Facebook's revenue, or Meta's revenue.
Revenue or income though?
Income. I mean, we can just look at these numbers down here. 23 billion, 39 billion in 2021, 20 billion in 2020. So basically, in the best case scenario, if Threads becomes as big as Twitter Plus, they run Threads much more profitably than Twitter was running.
Yeah.
Then max they could add like an extra 3 billion onto this. You know, change it from 23 billion to 26 billion. It's really small. Like you see, like even if they're successful with Threads, it's not gonna like solve the problem of like how are they going to keep their revenues growing like they have been.
So if they just do things extremely well, it's just going to give them a nice sort of kicker of $3 billion. There's bigger questions they need to solve, like how they're going to keep growing their Facebook revenue, their monthly active users there. That's still by far the most important part of their business, by far. Okay, so now we're doing the old intrinsic value calculation and maybe some financials. I can talk about the financials a little bit. So the two key things that I noticed with the financials, probably the two most important, debatably, was income. So that, as I said, they've been a cash flow generating machine, an income generating machine over the past 10, 12 years. Zuck has done amazing. He's blown expectations, what any investor kind of thought he could do in terms of actually generating positive cash flow 12 years ago. Yeah. And apart from the past 2 years where he spent so much money on the metaverse, where cash flow and income went down. But prior to that, he ran the business amazingly and generated so much income for the shareholders. Another thing that I quite liked is the low debt. He seems to manage the business with a reasonable amount of low debt relative to cash and, well, just relative to assets, relative to total assets. It's pretty low. It seems very, very manageable. What is that? Long-term debt, 9 billion. If you can see that.
That's
and
like
then
nothing.
That's nothing. I mean, how much cash do they have right now? Scroll up a bit. Yeah. And then they have 38 billion in cash and short-term investments. So they could pay off their debt very, very quickly. And in this type of interest rate environment where interest rates are so high, that is amazing to have. I'm sure the US government is very, very jealous of that tiny amount of debt that Zuck is running.
Okay, so yeah, this is the total revenue, the growth rate of the total revenue in each year since 2010. And the thing I noticed for this, I think the growth rate is slowly going down. So, you know, like back in 2010, it's like not like almost 90, and it was like in the high 50s for like a while. And it's been going down 26, 21, 37, and then it was negative in 2021. So like as an investor, I would not be confident in the growth rate remaining like at 20, especially due to the stuff that I talked about before about like, even if they like at max, they can double their total number of users, which would probably lead to about double the total number of revenue. So in my intrinsic value calculation, I think I'm going to use something like a 15% future growth rate. We'll leave years to forecast at 5, discount rate at 7, like usual. My thinking, I don't want to set the terminal PE too high. If I set it higher than 20, I feel like I would be being optimistic, especially if like you think about it in 5 years' time, investors are looking at this company that's been growing at 15%. I feel like I'll be being optimistic by setting the terminal PE, like the PE that I'm selling the company for, too high. And then all I wanted to do is just leave the cash flow, the starting cash flow. I just chose it somewhere in between what it was in 2022, which was a really good year, and what it was last year, or like the last 12 months, basically 17 billion. I just set it at 35 roughly. It's still really hard to guess what the intrinsic value is.
What was that, 17 and what was it in 2022? Sorry?
2022, it was 39 billion.
Oh, so it's like really 40 billion and 18 billion, was it?
Yeah, 40 billion.
Yeah. So you've been quite optimistic then, basically, because in between would be like 26 or something. I don't know.
Yeah, true. Yeah, I am being more on the optimistic side. Yeah. It probably is a little bit too optimistic, probably like 32 or something.
I was just going to say, yeah. So in 2023, he did spend all of that cash on the metaverse. So I guess after that you can expect the income or the cash flow to go up once he stops bleeding all that money in the metaverse.
Yeah. So exactly. So investing in Facebook now is in large part, it's a bet on how much Zuckerberg is going to clean up his finances. If you're not confident on Zuckerberg cleaning up his finances, you want to start with a lower starting cash flow. You want to say, like, if you think, oh, he's just going to keep wasting money, you would start with like 17 billion. If you think, oh, he's really going to like stop investing in metaverse completely and like figure something else to do with the money, you can probably set like a much higher starting free cash flow. I don't know what he would do. I'm sitting at somewhere in the middle, leaning towards optimistic that he's going to clean up his finances. Start at 32, keep that growing at about 15%, which probably seems about right. And then have a selling price of 20 times what the earnings were in that selling year. It comes up like basically it's about right. The value of it is about right. And like 23% above. So it's like saying it's a slightly good deal to buy it, but I would like round that down to like, I think it's valued probably about right now. So I don't know if you're getting a good deal or a bad deal.
I see. So you have it kind of around fair value.
Yes.
Yeah, I had something similar. I kind of got like, just from doing my own personal intrinsic value calculations, I kind of got that, yeah, if Zuck manages the business kind of well, kind of decently, doesn't bleed through all this money, you'll probably kind of see around a 10% average return. If he's managing the business really, really good, then probably around 20%. But I just think with Facebook, Meta, there's too much to lose. I mean, everything's going so well. They literally have 3 billion people using the platform, half the world using the platform. And I think they have more to lose than they have to gain, because with these type of social media things, they last a while, but when they do fall off, they fall off quickly. And when they do gain, they gain quickly. Like Meta just gained Facebook gained how many users over 5 years? So much. And it's the same when it falls off the cliff, when you can lose a lot very quickly. So risk reward. Personally, I'm not buying Meta stock. Maybe if the valuation was a whole lot cheaper, but that's just me. Lee, I'll let you finish with whatever you want.
Yeah. Interestingly enough, I did actually look into Meta stock around this time, around like October 22, when the price was like 93. And I remember thinking then like, oh yeah, this looks like a pretty good deal at this stage. I didn't invest in it because I found some other companies on the stock market which were even better deals. But it was like a really like exciting thing for me, especially now, to look back and be like, oh yeah, that's really cool. That when I analyzed it, I was like, I knew that it was a pretty good deal. And seeing now that the price has gone up, it's like, yeah, that's, it's like showing that value investing does pay off.